Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Hope everybody had a great weekend. Today we're going to actually do a deep dive into sector rotation, important levels in the market, specifically whether or not the S&P 500 is going to hold that all-important level. If it does hold, what stocks will we be looking to buy? If it does not hold, which stocks will we be looking to short sell? That's another big part. One thing we get questions about all the time are, do I have any recommendations for trading books? And I actually have one here that I'm going to point out to you today. We have a lot to cover. We're actually going to also break down the significance of tracking sector rotation from one day to the next, tracking the individual stocks within those sectors from one day to the next, and how to convert all of that information that you do in your game planning into the actual stocks that you trade from day to day and week to week, and how you can have conviction in those stocks that you buy. So we got a lot to cover today. We're going to start the week out with a bang. We got a ton of stuff. I'm actually going to take you behind the scenes into our swing trading newsletter so you can get an idea of how I prepare everybody every day. I think it's going to be really exciting for you. So stick around. I'll be back in just 1 second. Okay, so thank you everybody for being here with me today. We got a lot of stock picks to discuss. But just remember, everything that we talk about here is for educational purposes. It's up to you to make that final decision. I made it my mission to help you make better decisions. So here's what I want to first start out with. We get a ton of questions about trading books, and specifically, obviously, we're stock trading pros, so we spend all of our time talking about stocks. No matter how many books I happen to have on my bookshelf, I love stocks. It's actually been where I've been since the beginning of my trading career. Although I did start trading commodities in '94, it wasn't until stocks came into my life that I started to be a pro. But this is a book that I wanted to point out, how legendary traders made millions. You can see the author's name down here. I don't know if I can John Boyk is the name of the author. The reason that I like this book is that he actually goes decade by decade with different legendary traders, starting out in the early 1900s. Obviously starts out with Jesse Livermore and then goes through Bernard Baruch. Let me actually see if I can pull up the page for you at the beginning just to give you an idea of who's in the book. Yeah, let me pull it up right here. You can probably see that with a little bit better. He goes through Bernard Baruch, Jesse Livermore, Richard Wyckoff, which is a very popular trader, but not really known by, it's mostly in trading circles, but not necessarily in the public. And then he goes into Gerald Loeb, Nicholas Darvis, who wrote a very popular book, which we've talked about, Jack Dreyfus, and then ends up with William O'Neill. This book is really good. Take a look at it. Maybe 250, 260 pages. Definitely pick it up. And I'm going to tell you why it's important. That book is especially important because they walk you through the different economic conditions, higher interest rates, lower interest rates, economies flying, economies not flying. And I think it's really good lessons. I've actually learned quite a bit out of the book that when you're looking to buy stocks, when you're looking to sell stocks, you need to know the bigger picture to have conviction, to hold those bigger trades longer. So you pay for all those little pesky losses. So what's kind of cool about this is it goes through the stock market crash in 1929, the stock market crash in 1987. It goes through all the different booms and busts, but also then gets into the deeper analysis of which stocks to buy based on which sectors and industry groups are the hottest at that moment, which kind of takes us over to what we want to look at today. And we spent this morning talking about the S&P 500 and whether or not it was going to hold the bid. So you can see here, actually, the futures are actually getting hit. This is the level that we were looking for them to hold. If we work our way over into the SPY, basically that same level. We were looking for the 50-period moving average to hold. The SPY is actually taking a hit. Want to also work our way over into what basically Pete's picks. This is what I distribute every week, but I want to focus here first on this is this week, right? This is where we're looking at going into this week. But what I really want to do is I want to walk you through last week. And this is really what I want to focus on right here, is just so that we can understand why. It's interesting. We get a lot of people that come here and join us on YouTube every day, and like, you're talking about the same thing every day. And I'm like, yeah, success leaves clues. You have to have a process for identifying when the market is awesome and you want to be buying stocks with both hands. And then you need to have a process for when the market rolls over a little bit. And then you have to get a lot more stock specific. And I'm going to actually walk you through how I teach everybody how to do this and how I provide this for everybody every day, which includes my daily newsletter that goes out to our swing trade community. So I'm going to give you a peek behind the scenes at that today. But what I really want to talk about today is this sector rotation from last week, and just give you an idea of how just doing something as simple as this, or having access to this information, can make you a better stock trader, can make you a better stock picker, quite honestly, because you're literally following, piggybacking, mimicking what the smart money is doing, because this list can't rotate without them actually allocating money to buy stocks or dumping stocks, and you see the rotation change. So I just want to pull this up, and I want you to visualize the rotation from one day to the next, not only in the sectors that we're watching, but also how it rotates from the dominant sectors being buying opportunities to more and more sectors seeing supply being dumped on the market. Now, we all understand the word trend, and hopefully you understand order flow if you've been a member of these videos for a while now, which I'm very grateful that you're here. If you haven't done so yet, I'd really appreciate it, especially to provide some value for you. Make sure you smash that like button and hit the subscribe so you get updates. So I want to walk you through this, because this is the visual part of trading, that once you wrap your head around this and understand that trading is probably a lot more simpler than you might be making it right now, I want to hopefully give you some structure that either you could come into the boot camp and do this with me every day, or learn how to do it yourself. But I really want to provide some value and give you ideas that maybe will make you wake up and say, wow, I was making this a lot more difficult than it needs to be. And once you start to get this, it'll be a lot easier for you to figure out which stocks you want to buy. And then we're going to jump back into the S&P 500. All right. So this is last week. So you can see this is January 3rd, and we walk through the week. And now here's the thing. We're all familiar with chart reading. We're all familiar with moving averages and whatever indicators you watch, and whether they're trending up or trending down. What I teach, what I want you to visualize in this, just a simple spreadsheet, when I provide this every single day, I want you to be not looking at the trend like you would normally do on a chart, but I want you to look at the trend of order flow. And how obvious is it? How strong is it? Is it increasing? Is it decreasing? But just as importantly, where is it increasing? Where is it decreasing? And then how does that translate into trading ideas? It's a very simple process. But you need to structure it. You need to take your downtime and start mapping this stuff out. Hopefully I'm giving you the steps where you can kind of figure it out while you're doing it, right? So you can see last Monday, heading into the week, consumer defensive was actually pretty strong. Let me actually make that a little bigger so it's easier to see. This was actually the beginning of last week. So you can see technology, healthcare, and energy. They were towards the bottom of the list. Financial still kind of in the middle. Consumer cyclical actually started out the week actually pretty good, because there was news on increases in delivery for NIO, LI, XPEV, and Tesla. So to start out last week, electric vehicle stocks and stuff that was related to electric vehicle stocks on Monday and Tuesday actually had pretty good weeks. So they were shorter term opportunities who were looking to see if they held the bid and followed through. Now, if you remember, last Sunday and Monday, we discussed that pretty much every time these stocks announce deliveries, they make it sound to be amazing, other than Tesla. Tesla is obviously it's a whole animal by itself, obviously the leader of the pack. But even Rivian, for that matter, at that point, but NIO and XPEV specifically, they announce, the news pops for that day, and then all the numbers get analyzed, and well, it's not really that many cars yet. It's just increasing from what they did before. And we keep talking about it. So we've been saying that they're great short-term opportunities. You get a good pop off the news, but then they've been melting down until they give the guidance going forward of what they're expecting. That's the big news story we're going to need to pay attention to on these Chinese electric vehicle stocks, is when they exceed and the guidance then goes forward. What they did is great, but we're paying for what they're going to do. That's the future cash flows that we're paying for. So I want to keep walking you through. These are all the things that need to be going through your head prior to buying stocks. You need to be building, if this happens, then this happens. If this happens, then this happens. So we're going to work our way through. And now you should be visualizing, when you're looking at the sheet, visualize, where is the order flow? Where is the money flowing into, and where is the money flowing out of? That's the big thing. All right. So heading into the week, we noticed that healthcare, we mentioned that healthcare was starting to get hit a little bit. Energy, really not that exciting. And technology, which led the market higher. We had that all-time high in Apple, and we've seen some selling since then when it became a $3 trillion company for about a day or two. So we have five groups here that meet that minimum criteria to turn it green for the week, for that day, for that moment. Then we head into Tuesday, And we see consumer cyclical shot to the top of the list, but we're also seeing consumer defensive, energy, and utilities. So what does that tell you heading into the week? Whether we're looking at the S&P 500 and whether it's a buying opportunity and we're going to hold that bid, it's telling you right now that the news in the electric vehicle stocks has them all pumped up for that 2-day period. And then we were looking to see if they hold the bid. Tesla got over 1,200. We'll take a look at Tesla very briefly there, just to give you an idea of what we're talking about. So this was early in the week. Tesla got above 1,200, just kind of kissed it. And then as the week unfolded, consumer cyclical stocks did not hold that bid. Okay, so here they are early in the week, first 2 days a week. But this is kind of the alarm right here. So think about what was the big black cloud, and still the big black cloud that's hanging over the market right now. Interest rates. I don't know why I keep doing that, but interest rates, the specter of interest rates going up, and what's going to be affected the most positively from a stock price perspective and the most negatively from an interest rate increase. And right now that means real estate becomes a little bit of a different, better in air quotes, investment than equities. As soon as that interest rate starts to go up, the corporate profits can most likely start to get a little bit weaker. Consumer defensive, Pepsi, Coke, those kind of stocks, cigarette stocks like Philip Morris and Altria, market starts to get a little bit squirrely to the downside. Where is that money going to start rotating? So I'll just give you an example of that. So we started noticing that a little bit with consumer defensive earlier in the week. Then you start to work your way over to, okay, what stocks will be affected by that? And you start to take a look at Philip Morris. You start to take a look at Altria, and you start to put together these different perspectives of what's going on in the market. So now we work our way over. Energy, obviously, starting to work their way up the list. Energy went from 8 to 3. Now, this is the thing that I teach everybody in our community. If you are doing this work every day, if you're spending your spare time saying, you know what, I'm going to start acting like a pro, I'm going to start thinking like a pro, and I'm going to start making a commitment to understanding how professional traders have that conviction to make money every single day if the market follows through, and how they have that conviction to game plan and see their account go like this every single month. It comes down to spending that little bit extra time of doing exactly what I'm saying. So if interest rates go up, what does that probably mean for the next 90 days? Just something as simple as that. Then you start to dive into the sectors, and we're starting to see that unfold. We're starting to see financials starting to work their way up a little bit. Now, again, this is Tuesday. Consumer defensive, the market's getting a little bit more safety, for lack of a better way of putting it. Energy starting to work its way up. But now you'll notice that we're also starting to see the bottom of this list get a little bit heavier. Technology is starting to go down as interest rates start to have that conversation of going back up. Communication services starting to take a little bit of a hit. Now you can see that consumer cyclical had that one more day of follow through. But again, all in that context of the Fed minutes coming out on Wednesday. This is heading into Wednesday. These numbers are posted. Energy stocks starting to go up. Financial stocks starting to go up. Consumer defensive starts to go up. And these two sectors here started to work their way into the picture. But look at this. Look at the difference from here to here to here. So how does that affect you as a trader? So we're obviously talking about the S&P 500 right now and what we're looking at this week. Is the S&P 500 a buy? Actually, let me pull it up on the screen. We had this line in the sand. If you were a member of our community last week, we kept talking about desperately trying to hold. And you can see right now it's actually taking a hit. So what does that mean? Could we have forecast this big move down? Could we have forecast this? Now, this is where traders start to get into that trap where you think that you need to be predicting what's going to happen next. And nothing could be further from the truth. And this is where trading conviction comes from. This is where confidence comes from. This is where you expect to make money when you understand how to put these pieces together. If we're watching rotation from one day to the next, and let's put this in context, the S&P 500 just made new all-time highs here. Last week, the S&P 500 made new all-time highs. But we're watching the rotation from one day to the next. And you'll know that there's a lot of stocks, or I should say, there's a dominant little group of stocks that make the indices look a lot stronger than they are. There's the Apple, the Meta platforms now, the Facebook, Meta platform, Facebook, Amazon, Netflix, right? Those stocks that are a big portion heavily weighted in those indices. The indice readings themselves can be a little deceiving sometimes because you could have one or two stocks just holding up that bigger group of what you see in the Dow or the S&P, right? So the point that I'm making here is understanding how to read the rotation in and out of stocks, understanding, and again, I want to point this out for you because it's an important visual, that when it starts to get heavier on the bottom and the top starts to get a little bit weaker, you're starting to see this unfolding. Now, remember, this was heading into Tuesday. This was heading into Wednesday. So this is prior to the Fed minutes coming out. This is what it looked like after the Fed minutes coming out on Thursday. So I posted this Wednesday night after the fact. But if you're watching this Monday, Tuesday, and Wednesday heading into the week, what are you saying to yourself when you're looking to buy stocks as you're starting to notice that the bottom is getting heavier, even though we just hit all-time highs 2 days ago prior to the Fed minutes coming out on Wednesday afternoon at 2 o'clock last week? You have to be sitting up in your seat saying the tide is changing a little bit here. We're rotating out of one group of sectors into more defensive sectors, into more sectors affected by rotation into how interest rates are going to affect. And a couple of people mentioned it here, obviously, talking about the bank stocks. John put it in there, right? So bank stocks. So that's how you start to pay attention. So how does that all translate into what we're looking right now? And how does that unfold? So now I'm going to give you a little bit of a different picture heading into today, heading into what I'm anticipating for this week, because obviously a lot of the ideas that we're looking at, you want to have some ideas for which stocks to be buying during the week. So what I'm going to show you right now is the newsletter that goes out to our bootcamp and our swing trading community, and I'm updating this every day. So I want to give you a behind the scenes of what I'm preparing, how I'm thinking, and how maybe you could, if you want, you could join us, and I'll give this to you every day, including all the rotation. You can get a link in the description, or at least I'll give you some ideas of when you're looking to buy stocks, you start to build that conviction. So we're going to finish up last week and then go into how that applies to which stocks we're looking to trade this week. So you can see as Wednesday came out, we're actually still looking okay, but we started to get a little bit heavier on the bottom here. Then the Fed minutes came out, and you can see that energy and financial, which when we started out the week, energy and financial were in the bottom portion and started to really rocket higher based on the specter of the interest rates and the conversation becoming a lot more specific. So now, if you are a regular member of watching these videos with us, and hopefully you are, click that subscribe button. You know that one of the other things that we teach you is that as you're noticing this rotation, and this is where buying stocks becomes a heck of a lot easier when you have this process, as you notice the rotation, now you need to start rotating into the stocks that are getting institutional attention, where the smart money, got my wallet here. The smart money is actually putting money behind them. The smart money is dumping one sector, anticipating another sector. This is where being prepared is what makes trading 10 times easier. So again, I've shown you this before. When you work your way through the list, we also have, let me actually zoom this out a little bit so you can see, we have a bunch of other tabs on the bottom here. And one of those tabs are sector stocks. So if we happen to notice while we're watching sector rotation that money is flowing out of these areas and flowing into these areas as the week progresses, energy and financial working their way up on Thursday, energy and financial working up on Friday, that's when you need to be prepared with your list. And let me just zoom this in a little bit. You need to be prepared with your list of sectors. So we need to then drop down into energy and have this list of stocks that we're looking to trade. As soon as we notice that happens, then we also need to have financial list of stocks and rotate into those. So that's professional trading. That's what I hope that I'm inspiring you to understand, is that trading at the highest levels is not about the super secret indicator. It's not. It's a heck of a lot easier to see your account go like this month after month after month, where your drawdowns are measured. They're very small. You learn to mitigate risk or assess risk in a much better way when you get experienced. But that's only the first part. Understanding how to manage the downside and see money flowing out of a sector is different than understanding how to make money. Once you understand how to mitigate risk, once you understand the flow of money into and out of different sectors, and you're tracking that every week and you're using it in a way that makes a difference, then the next part of your trading is, let's say for argument's sake, as was pointed out before, you're looking at bank stocks. Then you need to make a list of bank stocks, and all of those stocks need to then go into your watch list. And this is the advanced part of it. Let's say mentally you're managing the downside and you're good on that, right? You still need to understand how to make money. But the biggest thing, before I get to that step, I want to make something very clear. and I talk about this every day, and I hope you take it to heart. Chart reading and trading are not the same thing. If you have to put that on a Post-it pad, put it on your forehead, put it all over your office wall, chart reading and trading are not the same skill. Making or losing money is trading. Chart reading, you're simply looking for patterns. And we called somebody out on this a couple of weeks ago where they say indicators don't work, patterns don't work. It's not that the patterns don't work. It's because you're looking for them to give you money. You're not using them in an what does that mean scenario. Okay, great. Chart reading, I noticed a pattern in an indicator. What does that mean? And how does that translate into position sizing? How does that translate into initial profit targets? How does that translate into what we call the profit maximizer? And how do we learn to make as much money on the other side? So we've talked about rotating. We talked about where money's flowing into. We've talked about where money's flowing out of. Now we talk about how do you recognize when a group of stocks is performing well. So now I'm going to take you over into heading into today and how this influences what should be inside of your trading platform, inside of your watch list. So this is today's list, okay? So I just want to give you a little bit of a deeper breakdown. So now we've talked about here, this is heading into today. Energy and financial is still rocking the boat, right? Now we have a list of the top stocks that meet the top criteria. So you can see that there's actually 31 there's 31 stocks in this list, but this is the most important thing. As you work your way through the list, we've already talked about energy stocks. We've already talked about financial stocks. So just right off the bat, knowing how those stocks unfolded and which sectors are the strongest, those are the ones should at least have your attention. But then you got to take it a step further. What is the S&P 500 doing? What is the Dow doing? What is the NASDAQ doing? Are they holding the bid? Because now you have to think to yourself, okay, that's great. I found the right area to be looking. I broke it down into the stocks that are performing the best inside of those groups. We call that the market leaders. I don't trade, again, I personally don't trade penny stocks. I am looking for market leaders in the strongest stocks that are trading with the market. Some people might say, look at the beta and how are they trading compared to the market, which is another good way of doing it. Now we take it a step further. We've just recognized the fact that energy stocks are strong. Financial stocks are seeing money flowing in there. But there's also another pocket of opportunity that you wouldn't notice unless you're doing this on a daily basis. And I'm going to show you that right now. And then we're going to jump over into looking at whether or not energy stocks are a viable opportunity today. So now we work our way down the list. And we know that there's 38 stocks in this list. And we notice that there are 11 stocks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks. 10 stocks in the industrial sector that the industrial sector has not worked its way up the list, but 10 stocks out of that 31 meet the perfect criteria. So now you have to go a little bit deeper and find those industrial stocks, which again, I've given you here, right here. You might want to watch this video, take that snapshot again, and put those stocks in your watch list. Now you're like, oh my gosh, this is so much work. Well, look, if you want to make unlimited amount of money, turn off Seinfeld. You want to make some money, you got to work your way through what is the market doing? Where is money flowing into? Where is money flowing out of? Do your own work. This is where conviction comes from. Now you'd be like, oh my gosh, that's a lot of work. Well, let me see. You could work an hour a day putting this stuff together in the way that I just showed you. And I just gave you a breakdown of how I do it for our community every day. Or you could watch 3 or 4 hours binging on Netflix and then complain that you don't get any breaks. So look, I'm going to act, whether you're in the boot camp or not, I'm going to act as your mentor. I'm going to act as your coach. And sometimes I'm going to give you some tough love. Don't complain. Shut the TV off. Turn off notifications on your phone. Stop going on Facebook. And somebody asked about the book again. Do that 1 hour of extra work. Think of your trading as part-time business that you're running. And I just gave you the format. So we just talked about energy stocks. We just talked about financial stocks. And now we just went a little bit deeper into industrial stocks. All that's the big picture. Now we work our way over into the market. And we've mentioned that the market needed to hold this 50-period moving average. And as of right now, it's not. So this level is a pretty big level. Friday's close, which was 464.65. So let's just use 465 as the level. So how does that translate, the S&P 500 and doing chart analysis on the S&P 500, how does that translate into all the other things that I just talked about? Well, now I know, and write this down, 465 is the level that I personally need to see the SPY get back up to. Is it 465? Let me just do that number one more time. The close on Friday, 466, excuse me. 466 is the level that I want to see. So regardless of how the market unfolds right now, if you know that we talk about the power pyramid, we have the market, then we have the sectors, which we just gave you the 3 sectors, then the industry groups, and then the individual stocks. So we could find plenty of ideas today to be trading just on an individual basis. But if we want to have that massive conviction where we're looking to hold ideas a little bit longer, build positions, I personally want to see the SPY back above 466. Now, this is where people who watch 2 seconds of these videos then give me comments on, you said we were going up today, blah, blah, blah. No, that's not what I said. What I said is if the SPY gets back above 466 and buyers come back in and reclaim that level, then I will be looking to trade with a little more conviction. If the SPY stays below 466 and we start to see selling, I'll look for short sales or I'll look for individual ideas that are holding the bid. That's what professional trading is. If the market is obvious, then I'm doing this. If the market reclaims that significant level, I'm doing this. If it doesn't, then I'm doing this, which means I might work my way even into some short sale opportunities. So what I want to walk you through now to really bring this home is to give you a much deeper dive into all of my thought processes over the weekend heading into Monday. Now, I just want to give you an idea. I provide this for everybody in our community every day, but I want to show it to you because I want to inspire you to think just a little bit deeper into how you're game planning and how you're trying to make money when you buy stocks each day, each week, and each month. This is the process. Now, think about this. If I told you you were going to have a part-time job, that you keep your full-time job, a part-time job, spend an hour to 90 minutes using this process that I'm showing you right now, that's going to be a heck of an awesome part-time business. The problem that traders have, stock traders specifically, is they don't put the time in. They don't put the time in to put together what they're looking for. They don't put the time in to do exactly what we showed you here, is track your rotation from one day to the next. Great on Monday. Looks okay here. Nothing, no signs of the ship sinking. All right, still looks pretty good. Maybe working our way down. All right, Apple pulled back from all-time highs. All right, Spider Sense going up, not looking awesome anymore. And now we start to get a little heavier. This is the day that the Fed minutes came out, and now we're starting to look heavier. So now, here's the next part before we actually get into the newsletter. What does this mean for your position sizing? If you start to see the market all turning green and everything looks great, what does that mean? Do you add more shares? Do you build a position? Do you go in more shares at the beginning of the trade? Do you allocate 100 shares to 5 different stocks as opposed to 500 shares to one stock? All of this has to be written down. If the market looks awesome, if we're above the 50-period moving average in the SPY, if sector rotation 6 out of 11 are positive, we're on the bullish side of things. What does that mean for profit expectation? What does that mean for share size? All of these things are, if this happens, then I do this. If this happens, then I do this. This is the whole point of us working together. Again, if you want to join the boot camp, click below, but I want to give you inspiration for what to think about. It's not as simple as I want to be a buyer today. You have to put these pieces together. Where are you from the optimal entry today, which is going to take me into the energy stocks because I want to point that out. The book, this is the book that I was talking about this morning. A couple of people were asking about that book. You can watch this video again. That's the author. This goes decade by decade in the stock market with different market conditions. It talks about the greatest traders. I think you'll love it. But here's the point that I want to get. Let's say you have all of that in the equation, right? So what does that mean you should trade today? Well, a lot of the energy stocks, which we just mentioned, are beyond the optimal entry. So now we're looking for them to pause. But some of the financial stocks, even though they have earnings this week, are a little bit better play now early in the week, such as JP Morgan, Citigroup, and American Express, actually. So now I'm going to walk you through the difference between that homework, that treasure hunt for ideas, into the actual ideas that I'm looking for today. So this is just the Monday edition. I just want to give you an idea of what I provide for everybody and how to get into my head and think about what I do. So now I'm going to walk you over into here. So this is the journal that I go through, and this is what I'm giving everybody today. So you can see the breakdown of what I just discussed, the SPY ETF, and you can see I wrote this yesterday. SPY ETF is desperately trying to hold support near the 466 level. If it can't, the next major level comes in at 452, which is all the way down here, which if we zoom out a little bit, you can see this level was resistance, became a breakout, held support, held support. So how could that not be the level? 1, 2, 3, 4 different times it was the level. So now you know if it starts to push down, that's where you expect buyers to take a step back up. All right. Remember, if then, that's what we all need to be thinking as a trader every day. Apple and Tesla took a big hit last week. If they can muster a new bid, they will carry the market higher for how long? So now we just mentioned that Apple and Tesla both took a hit last week. They're heavily weighted in the market. You can see Apple is clearly still above key levels. Tesla broke below those levels after getting above 1,200. So now working our way down. This is a big part of doing the analysis every day as well. The number of stocks below both the 50 and the 200 period simple moving average outnumber those above. So think about what we're doing now. We're watching sector rotation. We're seeing the bottom of that list get a little bit heavier. We're now seeing more stocks are below the 200, more stocks are below the 50. What does that mean for you, for trading activity, for position size, for profit targets, for whether or not you want to be looking at buying stocks? All of these things, you start to say, all right, I'm driving the car. It's raining out. I got to step on the gas a little bit. Brake, gas, brake. End up driving and stop and go traffic. Gas, brake. Opens up. All right, I can step on the gas. Trading is the same exact thing, but you need to understand this structure for how to look at the market. So now we're going to work our way through the other ideas that we're looking at this week. Okay. All right. Heading into Monday, the financials and the XLF are the only sectors to hold the bid. That means that they showed strength after the Fed minutes. So we already talked about that. We saw the XLF financials and energy stocks work our way up the rotation, right? So now we're doing a little bit deeper dive and getting into trading ideas. All right. After the Fed minutes crushed the markets, EOG is the only one relatively close to an optimal entry. So think about what I just said. EOG is the only one near an optimal entry in that strongest sector. Other stocks are well beyond the optimal entry. While they're still strong, I'm not looking to initiate trades. So I'm going to show you EOG and I'm going to show you Hess as two examples here. Okay. So if we're taking a look at EOG, you can see that EOG is in my list right now at or near a breakout level after pausing for 3 days. Hess has exploded for 5 days, well beyond the optimal entry and hit resistance. So you can see the difference now. This is where you shine as a trader, where you're elevating yourself. Hey, I found it in a scan yesterday. Hess was up another 2%. It was up 17% for the week or 14%, whatever it was. I can't wait to buy Hess on Monday. No. Where is it compared to the optimal entry? That's where you separate yourself from all the traders who say trading doesn't work, into the trader that understands risk management, position sizing. Is it too far from the optimal entry? Does it have room to go? These are the things that we need to work together day after day, week after week, and have these conversations. There's a difference between it meets the perfect criteria versus a trading opportunity today from a risk reward perspective. This is the stuff that makes you have conviction before you even put money into the market. Working our way down, again, we talked about energy stocks. A couple of people mentioned before. You can see Hess we just talked about. Some stocks I'm looking for, they have earnings scheduled before the market opens on Friday. Citigroup, JP Morgan, and Wells Fargo. So now we're rotating into, despite what the market's doing, these are the ideas. Also, financial stocks breaking out, STT, PGR, and Schwab, looking to begin building a position. So now, if you think about what I just said there, we're looking to begin building a position because the market's weak, the sector's strong. I'm not going in with full share size because the market conditions just got heavy from last Monday to this Monday. So I'm adjusting my position size. Despite the fact that it's one of the strongest sectors, I'm keeping the fact that the big picture of the market is a little bit rocky right now. So I like these ideas. I like the breakout ideas, but I'm not going in with full position. So I'm adjusting my position size based on open road versus stop and go traffic and raining or snow. I know people in the Northeast right now are dealing with cold weather and snow. So I actually have to head on over. I'm just going to give you one quick rundown on the whole thing right now. You can see some of the other ideas. Maybe you can work your way into watching this list. Maybe pause the video, go over it again. You can see my ideas for the week. You can see the rotation this week. You can see some of the other ideas that I'm looking for this week. Getting down into industrials, basic materials, and the ideas I'm looking at, working our way even further down into some other new swings. So that's the breakdown of how I look at the market every single day. But I wanted you to get excited on Monday thinking about what is your process for making money. And we started today talking about the S&P 500 and whether or not it was a buying opportunity. We talked about it crashed through that level and what would be the new level that matters to me using tape reading if it gets up to that level, and how does that influence what I'd be looking to buy at that point. Then we also broke it down to sector rotation from last Monday to this Monday. Watch the money flow into certain sectors, out of other sectors based on the Fed minutes last week and how that affected the overall market. Energy and financial rose to the top of the list. And then we broke down a list. And then we went into some other stocks to be considering to get long today. So hopefully you got a lot out of today. I was pretty pumped up to do this one today. I was excited to show everybody what my process is. But more importantly, I wanted to give you a sneak peek behind the scenes of what I do for the community every day. And if you wanted to take that dive into the boot camp, click the link below. If you want to stay here on social media, of course, that's fine as well. Please do me a favor. If you got some value out of this, smash that like button, hit the subscribe button, and make sure you get some other stuff. So join me every day here at 7:30 in the morning. I really appreciate it. Have an awesome day, everybody. I have to take off. I got to get ready for our other meeting. All right. Take care, everybody. Thank you so much.